Hello traders, this is a very important video for small cap day traders, especially those that trade my trading plan. I have made some changes to the plan. We took a trade today. I'm going to show you the trade, everything that happened with it. It was a nice one and done 3R trade. And I'm going to talk about the changes I've made to the plan, why I've made them, and the implications that they have. So first of all, this is the small cap screener. This is how I pick my stocks every day that I'm going to trade. We picked VERU today. All of the details about how to pick the stocks are in the trading plan. Now let's take a look at the video and we'll look at the trade and we'll see what happened with the trade, and then I'll go over all of the data, the statistics on the spreadsheet, how I track it, and talk about the changes made to the plan. So first of all, this is right at the open or near the open, and I'm just going through the different stocks on the screener. This is the screener live at 9:35 Eastern time, and I'm pulling the stocks off the screener that meet my, pulling the stocks off the screener that meet my screener criteria and checking them on the daily chart. And if they don't meet the daily chart criteria, then I remove them. So we ended up with VERU, which met the screener and daily chart criteria. You could see that I was looking to trade it before, so there's a bunch of lines I have to delete. The easiest thing to do, by the way, is to left click on the lines and press delete on the keyboard. If you left click and then right click to delete, it takes forever. So that's a nice little Weeble trick. Just click on any drawing and press delete on the keyboard and you can delete it very quickly. So right now what we're doing is marking out our key levels that we want to see broken. And there's going to be 2 yellow lines and 1 white line. And again, the meaning of all of those lines is all detailed in the trading plan. I can't go over every detail in the video, and we're going to see all of those levels broken. This blue line here is kind of new, so I will explain that. I'm not even sure if I put that in the trading plan yet. I may have to update it for that. Actually, no, that is in the latest version. So anyway, the blue line represents the level of 5% change. So that means that that price is where the stock is 5% over the previous day. So one of the rules of the trading plan is that we can't take any entries if the price is below 5%. So we have to know where that level is. And the cool thing is I have a calculator that I enter in the previous close. Let me see if I can get to the point in the video where I use that. Here we go. So this is my trading calculator. Again, also available on patreon.com/tradingarmor. I pull up the closing price. That's given to me on the screener. I type that in. I type in the percent change, and then it spits out the price. So 1763 is where this stock is at its 5% change. And if the price falls below that level, then I'm no longer allowed to trade it. And that's told to me in my trading plan that, hey, I can't take any entries below 5%. And everything that we've done with all of our testing was with all of those criteria met. So if I do anything outside of that criteria, it's a random trade and I have no idea what the statistical probability of the trade working out is. So that's kind of motivation for me to just stick to the trading plan. All right, so there's our second key level that we need to see broken, and it does get broken. And then our white line, that's our final level. Once that is broken, then as of right now, we can take an entry. So this is where the plan is I'm making some changes to the trading plan on that first entry. So if you've been following me, if you've watched my small cap playlist where I showed every single one of those 100 trades, you know that we were taking the first entry after this white line was hit once a 1 minute candle made a new high. What we found out after trading 100 trades was that that trade wasn't profitable or was very close to break even. So we decided to omit that trade and let that trade kind of play out without us, and then we would take the next entry. Well, I've been trying to do that for over a month now, and it's extremely difficult, extremely frustrating to trade that way. So what I decided to do was to alter the plan, kind of almost take it back to what it was in the testing phase, which is going to remove some profitability. I'll tell you exactly how much in just a minute. It's going to remove some profitability, but it's going to increase the tradability of the plan. And that is key, because who cares if a plan is optimized for profitability, but you don't want to trade it. You can't trade it. you can't stand trading it, then it's useless. You're not going to get any of that profit. So I'm giving up a little bit of profit to make this thing more tradable. And I'll tell you exactly how much profit right now. I'll show you on the spreadsheet, and then we'll come back to this trade. This is today's trade. So this is all the data from my forward testing, not back testing. This is testing with real trades. You can see there's a ton of trades on here. Let me zoom out just to show you how much data is here. It's a lot. Okay, so there's no way I could show you all of the data in one video, but you can see we took over 100 trades, we collected all the data, and what we found out, I'll give you kind of the gist of it right now. What we found out is that it's profitable if we hold to a 3R profit target with a reward of 15 times our risk. All right, when we were testing, we held it to 2R just to make the trades go quicker, and we found out that wasn't profitable. It was basically break even. But if we hold to 3R, enough of the trades went to the 3R profit target, 3 times our risk, to make us profitable by 15 times whatever value you're risking. Now, what we found out also was that trade number 1 was not profitable. It ended up with a minus 6R value, even holding the 3R. But keep in mind that that's after over 100 trades, and that's only a difference of 2 winning trades. If you had 2 winning 3R trades, you're back to break even. So it is very possible that this trade could be break even or even slightly profitable, depending on overall market conditions. Now let's get to kind of the meat and potatoes of it. What does it all mean? Is that here's our, okay, sorry about that. Let me get back on track here. So our 3R win rate with that first entry is 15 times our risk. Now, if we remove that first trade, it's 21 times our risk. So that's a difference of about 28%. So what I was saying earlier in the video is that we are giving up 28% profitability, but still very profitable, 15 times our risk after 100 trades, just to make this plan actually tradable, which is key. Who cares if it can get 21 times your risk, but you can't trade it? So you're not actually going to get that. You're not going to make anything because you're not going to be able to stand trading it. This is much more tradable. Let's get to back to the trade, and I'll show you why. You could see here I'm about to get triggered into a trade. There we go. I'm in the trade now. So that was at 9:40 Eastern time. So I've been watching this chart for 10 minutes and I'm already into a trade. This is the very first trade. Now this is not going to work out every time. In fact, it's not going to work out most of the time. But over a 100 trade period, our data shows that it's going to work out often enough to be profitable. There's also 2 other trades we can take if this trade gets stopped out. So today was a perfect day because the very first trade worked. You saw me again using my XR calculator there to figure out my profit target. My stop loss is placed based on the price action. And again, all of the details about where to get in, where to place my stop loss, where to place my target, that's all detailed in the trading plan. So now all we have to do is let the trade play out. We don't have to do anything really. So I just kind of walk away at this point, go make coffee, do whatever, and the trade plays out. So I'm going to fast forward and we'll see what happens here. So it looks like right now the trade is going to fail, but you see that I don't change anything. I just let the trade play out. And it got near my stop, but did not hit the stop. And let's see, I just flipped to the daily chart there for a second. But now we're back in the, or we're still in the trade, I should say. I'm just double checking all of my numbers were entered correctly. That's a good thing to do when you have time to check to make sure you put in the correct entry price, the correct stop loss, the reward factor. That's telling it to calculate 3 times the risk, and it gives you the profit target at 1832. And this keeps you from making like silly math errors while you're in the heat of a trade. That's why I like using that calculator. So anyway, now we're in the trade and we're just letting the trade play out. If you're a newer trader, you know, this is where you might have some issue. You see this thing kind of struggling to hit the profit target and you might want to raise your stop. That's not a good thing to do because you're going to screw up all of your data and your statistics. The reason why I can hold through all of this choppy price action is because I have data telling me that this is profitable as long as I hold till that 3-hour profit target. If I don't, it won't be profitable. So it makes it very easy. The discipline is kind of learned, you know, in that sense. I know that that's what I need to do, so I just do it. So you see how the price comes down, and I don't change anything. I don't say, oh, it's getting weak, let me raise my stop up and just get what I can. No, I just let the trade play out. And now we're going to watch the profit target get hit in just a second here. So 1832, again, it's bouncing around. You know, you might get nervous saying, okay, maybe it's not going to hit. Maybe I should just take what I can get. No, just follow your data, follow your plan, and that's really the best thing you can do. And today, luckily, it did work out. And this is actually the first trade, the first full position size trade of the small cap plan. So we collected our data for that. I'll show you that on our current spreadsheet. Here it is right there. So this is the trade. Here's our entry, our exit price. We're only collecting the important data, and these are the fees that are kind of built into to Webull. It automatically pulls this out, and I just add these in so that the P&L matches. Now, why are we only trading 5 shares now that we've tested this thing? Because we are doing things in a stepwise fashion. So during the testing phase, everything was one single share because we just wanted to collect data. So let's see, I know I have my share size up here somewhere. Yeah, number of shares. So you could see that all of the trades were taken with one single share. And that's what we were doing while we were testing. So what's the next step when you go full position size? For me, the next smartest thing to do is to trade with relative position size. So we are using $100 on every single trade, and we're going to buy as many shares as we can with that $100, and that's going to make our relative risk the same. So this thing really should make us some money in the end. And once we have collected 100 trades, trading with $100, then we will bump it up to the next phase. So I'll explain what that is when we get there. The other interesting thing that I'm doing on this spreadsheet is I am tracking multiple profit targets. So we're going to track, again, we did this during the testing, the 2R, the 3R, but we did not track 4R and 5R. So we're going to track all of those, and then at the end, we'll add them all up and see which one is more profitable. And that's pretty much it. Now, if we go back to the chart on, what was it, VERU, we'll see that it did not go past that 3R profit target. Let me just pull up my chart page here. That's the SPY. Let's see. And by the way, we are in a SPXL trade as well today, so I'll go over that later. So yeah, you could see that we were filled, I think it was 1835, I believe, on this candle. And then this thing fell down and it would have hit our stop loss if we were holding for a higher profit target. So it is what it is. We're just tracking that stuff. We know that if we hold till 3R, we're profitable. And then in the end, we'll find out is maybe 4R is more profitable in the long run, or 5R, or whatever. So let me know if you have any questions about this. I am going to upload the updated trading plan to my Patreon a little bit later today. So look out for that, especially if you're currently trading that plan. These are huge, they're really just 2 or 3 changes, but they make a huge difference to the trading plan. So make sure you check that out, read it, understand it. If you don't, let me know. Leave a comment in the comment section below of this video. Let me know if you found any of this interesting or useful. If you have any questions, you can let me know. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop loss, honor your profit target, and in the long run, you should be green. Take care.